Hello from Sausalito, California, and I'm Charles Biederman. With me today is Eric Sprott of Sprott Asset Management. Eric has been one of the most successful hard money or precious metal investors in our time. His firm currently manages approximately $10 billion in various different entities, including mutual funds, hedge funds, and private money. I asked Eric to join me today because, one, not only is he such a well-known investor, but I seem to hit a hot button when I recommended people buy GLD, the gold ETF, at a dollar cost average basis, and many people said that is not the way to go. So I thought I'd have a conversation with Eric. What's wrong with the GLD at the ETF or the SLV ETF, and what is the right way to buy gold or silver on a dollar cost monthly basis?
Sure. Well, Charles, I'm glad to be here, and I'm very pleased that you've begun these video broadcasts. I know myself; I watch them regularly, and I love the way you analyze things with your background with chin pads, and it's been very helpful to the general public. As regards your question, there is a feeling of those in the gold community that the first premise is always have access to the physical gold. And when you own the GLD or the SLV, you don't have access to the physical gold. That's the first concern. The second concern is one that really I can't necessarily give a qualitative aspect to it, but there is a concern that perhaps all the gold is not there. There's been many suggestions when you read the prospectus that the sub-custodians are not audited. There was a CNBC clip where Bob Bassani was supposedly at the GLD vault and held up a bar, and it wasn't 100 bars of gold, which sort of went viral on the internet. There's been speculation that you couldn't even hold as much gold as they suggest they have in that one vault, just due to physical limitations. So, and that, and one further thing, that there's always a counterparty risk. You know, we saw a situation with MF Global where people held gold and silver, and next thing you know, MF Global was bankrupt, and the gold and silver was sold. So all of those factors have created some fear to owning the GLD and the SLV.
And do you think it's warranted?
Well, I'd certainly be in that camp in the sense that we started our own gold and silver trusts where people could redeem in physical metal as an alternative to the GLD and the SLV. And why take the gamble that it's not there? There's been so many things that seem to go awry in the financial area that why not invest in a situation where you specifically can redeem it. And for example, in our trust, our counterparty is the Royal Canadian Mint, which is a Canadian government agency. They're not a leveraged financial institution, so people have that opportunity. The other thing about our trust in particular is that the tax rate on our units is at a capital gains tax rate, whereas in the case of the GLD and the SLV, that they're treated at a different tax rate because they're considered an investable, there's a word for it, collectibles. They're considered collectibles and therefore taxed at a different tax rate. I think the difference in tax rates is about 15.
I assume so. What you're saying is the best way to buy gold and silver is through your vehicles. How do you buy them? Where are they traded? What's a ticker symbol? What's the assets under management and the growth of such?
Sure. Well, I'm not suggesting that's the only vehicle. It's a very convenient vehicle for people who want to trade on the exchanges. Both units are listed on the NYSE and on the Toronto Stock Exchange. I think I don't want to rule out that people should own their own gold if they don't mind the inconvenience of storage and safety and things like that. That's always a preferred route if you're not worried about those things. So our units trade on those two exchanges. They trade at modest premiums to the underlying net asset value, and I think they trade at those premiums because of tax advantages, the counterparty risk advantages, and the fact that they're exchangeable into the physical product. So they're available quite readily to anyone. The symbols for the silver is PSLV, and the symbol for the gold trust is PHYS.
And the assets under management for both?
I think the silver is probably about 1.2 billion, something in that area, and gold would probably be pushing 2 billion.
How did you get into what was like the aha moment that got you into precious metals and gold, and you saw that this is where I want to concentrate on?
Yeah. Well, I got involved in precious metals back in 2000 as a very active participant, both for funds and owning physical gold. And my assumption was that we're going into a long secular bear market because NASDAQ was going to roll over and subsequently did roll over. It seemed apparent to me that the only way to kind of prosper or survive really was what I was trying to do, survive, was to own precious metals, because they had a history of rising in value when you get into that type of situation. I quite frankly would not have imagined they would have risen as dramatically as they did. But by the same token, I wouldn't imagine that we'd evolved into a financial system that we have now.
Yeah, well, you wouldn't have, nobody could have imagined a QE 1, 2, 3, 4, 5, and et al. You know,
Right.
basing the monetary base of not only the United States but Europe and Japan, and creating this printing press and this unbelievable reality that most people are accepting the product of the printing press as the equivalent of gold.
Yeah. So that's created a great tailwind for us. You know, I just couldn't have imagined back in 2000 that gold would go to, you know, as high as 1920 and right now around 1650. But events have moved along that where almost every month somebody's debasing their currency, and it creates more and more of an incentive for people to own a hard asset.
So what would you see as the biggest short-term risk to the price of gold and silver over the next 3 to 6 months to conclude our chat today?
Well, I've always thought that the great risk is that we come to our financial senses and survive. Now, I don't see us coming to our financial senses, and it's certainly not being demonstrated anywhere. And the bigger question is survival. In other words, you may decide that, gee, we got to stop printing money, but what happens to economies and the financial state? And I would guess that one of the reasons we have to keep printing money is you can't let the first domino fall. We found out with Lehman that whenever you have a liquidity event or liquidation event, it creates massive stress in the financial system. And that's why everything has to be bailed out these days, because we don't want to get the dominoes to start to fall. But that would appear to be the only solution. So I don't have much fear of gold going down in today's environment.
That's a good place to conclude our chat. Thank you very much, Eric. Good investing. I'd hope to chat with you again.
I'll look forward to that, and all the best to you and your listeners. Thanks.